Hello, my name is Temple of TNT Lawyers. This is the second part of a three-part series on how to survive financially after you've been injured in a motor vehicle accident when you're unable to work. And I'm going to talk to you now about people that have been either fortunate enough or well advised enough that they have good disability insurance or some form of income replacement, so that when they're injured, they're not in a catastrophic situation financially, but they still could do a lot better. So hopefully I have some tips for you which will enhance the amount you can receive per month while you're unable to work. This is going to make your life a heck of a lot less miserable. You've got your injuries to deal with, but at least you don't have your finances to deal with. So the first group I'd like to talk about is that very fortunate group. Usually they work for the government or hospitals who have accumulated sick pay. Most private sector people, of course, their sick pay is per year and there's no accumulation. But many people in the public sector have 100 days accumulated. Well, that's great because they're going to get 100% of their pay for those 100 days. But here's an important point. When that runs out, make sure that well ahead of it running out, you apply for whatever benefit comes next. If it's EI, there's going to be at least a delay of a month and perhaps 2 months. So you better get busy at least 2 months before the end of your sick pay runs out, so that there's a continuity in your benefits. And of course, if it's a disability plan, like short-term disability through work, then get busy and get that all arranged ahead of time. The second group are people that don't have sick pay, and this is mainly private sector people, mostly with larger companies, that have disability insurance. Now, some people have 75% of gross income before taxes as their disability insurance, but then they have to pay tax on that. How it works is if your employer paid any part of your premium, you have to pay tax on the benefits. If you paid the entire premium, 100% of it, then it's not taxable. So that will become important in a second. So the second group of people are people that have a disability plan through work, often short-term disability and then long-term disability, and that kicks in maybe within a week of the person becoming disabled, and that's great. However, there's a very important piece of information you should know, which is, I'm going to give you an example. Let's say you earned an average of $4,000 a month in the year before the accident. And now under your disability plan, you don't have a very generous one. You only have a 50% plan. Lots of people have 50%, 60%, two-third plans. They all need some help. That's just not enough money to survive. And ICBC has been set up to help those people. It's called TTD, or Total Disability Benefit. That's part of the accident benefits, top up. So they'll top it up to 3/4 of your gross pre-tax wages. So with the example I gave, $4,000 a month pre-accident, now only $2,000 a month on a 50% plan. The top up will be to how much? 3/4 of 4,000 is 3,000, so the top up is 3,000 less 2,000 is 1,000. So it'll be a $1,000 top up to 75% of your pre-accident wage. That can help. And here's the good news. As I mentioned before, you paid the premiums, so it's not taxable. So it's the equivalent of getting another $1,300 or so from your disability insurer, and that because that money's taxable. So this is really an important thing, and ICBC often doesn't tell people about it. So make sure you insist on TTD top-up. TTD meaning Total Temporary Disability Benefits, or you can simply call it ICBC Disability Benefits. Okay? Now, the third group of people are people that have private disability insurance. Let's say their firm doesn't provide it, or they're self-employed, they have a small business. The problem with that group is it's very expensive to buy premiums as an individual. So you have to be part of a group, because insurance companies base everything on the risk being ameliorated by a group. Because some people get sick and others are completely healthy. So Often it's done through the Chamber of Commerce. The Chamber of Commerce provides that to small business people. And people that have high-risk jobs, let's say, for example, people that do heavy work, such as, carpenters and plumbers, things like that are self-employed, they pay basically the same premium as everyone else on these group plans. So it's a good deal. But if you can't afford one of these group plans, then here's what you can consider. ICBC has a special policy called income replacement. People aren't told about this plan when they go to their agent. In my many years of practicing law, I have never had one client who's come in and said, I'm getting the 300 basic disability benefits from ICBC, plus I bought that extra policy, income replacement policy, so I'm getting another 400, so I'm getting 700 a week tax-free, so that's the equivalent of like 4,000 a month before tax, so I'm okay. Never happened. So what I'm going to suggest you do is, it's too late for you now. You've been injured. You can't go to your insurance company and say, well, I'd like to retroactively get that policy. Why didn't you tell me about it? But at least you can tell your family, friends, relatives, co-workers that there's a policy for people. It's great for self-employed people who don't have a plan, who can't afford a plan. It's less than $100 a year. It only, of course, covers car accident cases, but it gets you the money now. Yes, we can get you compensation for your lost income down the road at the end of your case, but you need it now. You don't need it then. That's one of the reasons why the premiums are fairly small, because essentially it's basically, we'll give it to you now, you're not at fault, so you're going to get it in the end as part of damages. But of course, if you're 100% at fault, you still get it. Because remember, accident benefits are regardless of fault. Okay? And lines of credit. That is one of the best and most powerful tool you can have to protect yourself when you're injured. You may never need your line of credit, but that's when you should get it, when you don't need it. You've got a good job. The bank loves to lend money to people when they're 100% guaranteed they're going to get the money back. And credit unions the same. Okay, so now you've been injured, you don't have a line of credit, what do? I still think you should give it a shot. Obviously, you're in a much worse position, bargaining position, and you may need a guarantor for the line of credit. So if you can find a sibling, a parent, a top, one of your best friends to be willing to guarantee the line of credit, that would be fantastic. And they may well lend you the money, give you a line of credit. But the best way to do it, of course, is before you have any sort of traumatic event. So again, tell your friends, relatives, co-workers, get a line of credit for as much as you can possibly get, possibly secured by a mortgage, which would give you a lower rate and give you a larger amount. But of course, there is a cost to that because you have to register the mortgage. Yeah, so you have to weigh that out. But get it before the traumatic event. So at least you've learned the hard way, but at least you can pass on what you've learned. So those are the main points I want to talk about regarding surviving in the short term when at least you have something decent in place. And we're talking mainly about top-up of disability benefits from ICBC and line of credit. And I invite you to watch the third video, which will cover the more challenged members of society who are mainly relying on EI sickness benefits and the ICBC total disability benefits to survive. And that is not easy, but we'll deal with it. Next episode.